And welcome back to Retirement Coffee Talk with Sharice Rivers at Zinnia Wealth. Online, find us, zinniawealth.com, ZINNIA wealth.com. While you're there, hit the button that says Events. You can find out where Sharice is going to be instructing with Zinnia U. And if you have questions about retirement, we're all over the place. So there's a lot there. You can sign up right there on our website. There's another tab there that says Contact Us. And when you click on that and scroll down a little bit, there's a button there that says Question for Zinnia. And if you have a question that you'd like for us to handle on the radio, just write that question in right there. And this isn't a question that came to us, but it's a question that came into the Market Watch advice column. So this is kind of the way that we do this. And it's a question about long-term care. This woman says, I'm 69, my husband is 65. We both have pensions and we both have Social Security, and that adds up to $200,000 a year. Congratulations there. Wow. And they have also saved $1.5 million, and they say they don't even touch that. So they looked at long-term care policies, and they found they all top out at about $360,000. Well, we've got that saved, so we're wondering, do I buy a policy, or do I just say, hey, if this happens, we're just going to take it out of pocket? So what are your thoughts on that one?
So I have a lot of questions for this person, as I would, of course, or I can't answer it without it. But $200,000 is a lot in pension and Social Security. Mm-hmm. So my first question to them would be, do you spend that entire $200,000? Mm-hmm. And if they say, no, we don't, they could start taking the dollars that they're not spending and button it up into a sideline retirement plan that's in a safe fund that's just growing for the next 20 or 30 years till they need it. So that's an easy fix, right? So no, they don't need long-term care. Now, if they say, yes, Sharice, we use every dollar and we spend it all. My next question would be, well, if one of you pass away, does that pension pass on to the surviving spouse, right? Those are other questions we have to ask, because we already know when somebody passes away, we lose one Social Security.
Right.
And if they both pass on, that's great. We have an amazing amount of income. We only lose a Social Security check after somebody passes away, after they're in a nursing home. And the question was, they've saved $1.5 million. They don't need to save it. They don't need to do anything with that. They'll go buy insurance, because the insurance, basically, it's only covering $360,000 of total long-term care benefits. And that's over 3 years. Mm-hmm. You can't use that for 1 year. It's split up over 3 years. They wouldn't even allow that to happen. Mm-hmm. So for them, $360,000, if they're 65 and 69 now, in 20 years would be maybe the earliest they would need it, 85, 89 years old. Mm-hmm. Their $1.5 million in 20 years should certainly double to $3 million. So do we go buy expensive long-term care or even life insurance and waste that premium when we might have 2.5 to 3 million at 80 and 85 years old? And the answer is no. No, why would we do that? You are the person who can self-fund. So when people come into our office, Randy, the second appointment, we do the income plan. This is how we find out whether or not they really need a long-term care plan or not. And we'll show you, see the math. It doesn't make sense, because I truly believe in not wasting money on a premium for something you're probably not going to use, or you can afford to spend your own dollars and make your money work even better for you. So that's how I see that. So a lot of people, if you got 1.8 to 2.5 million in your 80s, then no, you're probably not going to need a long-term care plan, because you can self-fund.
Gotcha.
But let's keep talking about this. A lot of people are out there selling life insurance and saying, hey, buy life insurance. You can accelerate the death benefit and use that for your care. And, sometimes that's actually a pretty good idea, because there's always going to be a life benefit left over tax-free to somebody. If you never use a long-term care life insurance policy, somebody's going to get a bunch of money tax-free. So at least somebody's going to get that money in case you don't use it for a nursing home. You know what I mean? So I like the life insurance strategy a little bit better than a regular John Hancock or Genworth long-term care policy. I'm just not a fan of those anymore. But 20 years ago, I was the first one saying, no, we need John Hancock and a Genworth, right? But now I'm not, because things have definitely changed, and you got to move with the changes. But if you are somebody who has a nice pension and Social Security, you guys are getting by, and you have $500,000 in assets, you might be the perfect person to consider some sort of long-term care strategy with some sort of insurance that's cost effective. As long as you don't need a big chunk of that $500,000 that you have saved, you very well might be the perfect candidate to get some sort of long-term care plan. If you're $500,000 to $700,000 in assets today, and you get 20 to 30 years left to live in retirement, depending on how much you're pulling off that money you've saved. So again, it's not cookie cutter. So that's kind of where my wheelhouse is in numbers until I get to know you. But I want to go over the cost of care. Because if you go to skilled nursing care, across the country, the average is, $7,000 a month for skilled nursing care, right? That means, your food's prepped for you. You just go to the cafeteria. They get somebody checking on you when it needs to be checked on. It's not full care, right? And then you have $10,000 a month on average if you need a 24/7 memory care unit. You need somebody 24/7. So that's $10,000 a month. That's $120,000 a year, right? And then home health care. Like my clients and myself personally, if all of a sudden my memory goes or there's 2 activities of daily living I can't do, I want to stay in my home. Darn it, I want to stay on my couch. So I'd rather have somebody come into my house and take care of me. And that could be $40,000 to $60,000 a year, depending if you need somebody for 8 hours a day or if you really need somebody there 24 hours a day. So costs are more effective for home health care. And most people are doing home health care before nursing home anyway. So do remember that. But I will tell you, there are anomalies out there. There's one, and I want to say in every 200 people. I don't know. I think it's even worse than that. 1 of every 1,000 people. You could be the anomaly, and you could be in a nursing home for 10 years. You could be healthy as can be, and just the memory went, onset of dementia, or whatever it might be, and you could be there for 10 years. That is when we for sure want to get elder attorneys involved. But you can get elder attorneys involved before we even know we have a memory problem. So people who have a very large amount of wealth, there's really neat instruments attorneys use to protect your assets from being spent in the long-term care facility so that the spouse still alive in a house doesn't become destitute. And these are different types of trusts. We call these asset protection trusts, irrevocable trusts. There's different kinds. But basically, it's just a legal instrument that takes the assets off the balance sheet so that they don't add it to the equation so that Medicaid can kick in. And those rules still apply. So those are some things that you can do. And when my clients turned 75 years old, and we started having those conversations. Is this something we want to work on? Get the house out of your name, get a few other things out of your name so that we don't apply these things to the Medicaid spend down. So there is money left over for the spouse still alive in the house. So there are so many directions, you all that are listening today. I know I'm giving you a lot of information. It might be overwhelming. And that is why it's so important to come to our classes. We talk about this in our classes. Come see us, any of the advisors in the office. We're educating you on why or why not. We're just not saying, no, you can't, or yes, you can. We're giving you these examples and why it's so important and the cost of care and why you are perfect for this scenario, or maybe this is another scenario for you. So again, long-term care can leave your spouse financially destitute. So whether you have $2 million right now or $500,000 right now, there is a way to make sure we protect our money the best that we can.
Thanks for listening to the Retirement Coffee Talk podcast. If you have questions or would like to begin the process of building a tailored retirement plan, call Zinnia Wealth at 803-368-3680 or find us online at zinniawealth.com.
Sharice Rivers is an investment advisor representative of Zinnia Wealth Advisory, LLC, a registered investment advisor. Exposure to ideas and financial vehicles discussed should not be considered investment advice or recommendation to buy or sell any financial vehicle. Past performance is not a guarantee of future results. Investments can fluctuate and when redeemed may be worth more or less than when originally invested. Financial professionals are not licensed in all 50 states. To find out if Sharice Rivers is licensed in your state, please contact their office. Zinnia Wealth Advisory, LLC is not affiliated with nor endorsed by the Social Security Administration or any other government agency and does not provide legal or tax advice. Annuity guarantees rely solely on the financial strength and claims-paying ability of the issuing insurance company. Any client experiences discussed during this show are unique to that client. They are not meant to imply or suggest you will experience the same results. By contacting us, you may be provided with information about insurance and annuity products offered through Sharice Rivers, NPN Insurance License Number 8718011.